Moving on to business matters, it is fast becoming a trend that many Kenyans are opting to go for loans in order to make progressive strides in their lives. This notwithstanding, the move has come with its fair share of consequences, interest rates over the last 5 months increasing significantly. But according to the East Africa Bankers Association, it is a problem not only designed for Kenyans, but something that cuts across the region.
The coming to effect of the Common Market Protocol in 2010 has seen the public sector arm of partnership embrace the harmonization of system in the context of East Africa community. The financial services sector has seen a lot of growth in the recent past, with a number of banks spreading their footprints regionally.
And we can talk of the likes of EcoBank, we can talk of the likes of UAB Bank, we can talk of a number of other banks that have come in and are looking at the market as a region. We have got banks that originated maybe from Kenya or from Uganda, but they are spreading into the region.
One of the market drivers is the policy direction, which is from the Monetary Policy Committee. The Kenyan shilling has in the past experienced a sharp decline, with the problem attributed to structural problem in the country's economy that will need long-term interventions to resolve. Credit was expanding at a higher rate than the economic growth, prompting the committee to control resulting inflation demand by slowing down the growth of the credit expansion.
The instrument used was to increase the interest rates in the market, and how they direct that is by increasing the signaling rate, which is the central bank rate. And so the central bank rate went from 11% to 16.5% to 18%. And the market then generally moved in the same direction. And so the banks, finding the cost in the market, cost of funds in the market going up, they also acted in the same direction. 1%.
According to Olaka, the hike in the interest rate is just a temporary situation, as now there are indications that the turn of events reveals that there are good tidings in the offing.
The Monetary Policy Committee, they make the decision based on economic fundamentals in the market, and when the fundamentals start improving, they also start coming down. And so when the CBR starts coming down, to be a signal to the market that things are improving and we start coming down. So you'll see banks also start moving in the same direction. I cannot tell, but I think from the indications that are quite clear in terms of the parameters like the inflation coming down, I think that will be sooner rather than later.
This having been a globally experienced problem, the formation of the East Africa Bankers Association will try to address this issue of common concern in the trading partner states.
For us to achieve the monetary union, we need to have a convergence of the macroeconomic factors. So we need to have a convergence. So things like inflation, things like the exchange rate, things like a derivative of it, which is the interest rate, should converge to an agreed number, so that when we convert into a single currency, the physical policies within the individual member countries does not offset the balance. And we can see that happening in the EU, where it's quite clear that some countries came into the union and they had not quite achieved that convergence.
While signing an MOU, key problem realized facing the ESC member countries is how to come up with a common currency, whose deadline is the end of this year.
I think the initial target was 2012, but I think the indications are that that may be too ambitious a target to achieve. Your guess is as good as mine, but I think we can achieve it earlier than that.
EABA has a vital role to play in the ongoing process of negotiations for the East African Community Monetary Union. Harmonized regional systems will virtually eliminate regulation
on to business
field for all players who wish to exploit the wider regional market that came into being upon actualization of the Common Market Protocol. This is beneficial to the regulators, banks, the bankers associations, and more importantly, the consumers of banking services in the region.